We'll see how Bitcoin responds here, but overall, a scarce asset like Bitcoin should do pretty well in that environment once it gets through any sort of transient pressures that it's going through at the moment.
Bitcoin will be at least $1 million in 10 years, and I'm pretty sure that it's going to get there by going up and down and up and down and up and down in very wild swings, because that's what it does. I think we had 6 downswings of about more than 30% in the 2017 bull market. So if you've been in Bitcoin a while, you've seen this again and again and again.
Yes, I remain long Bitcoin, and so for my investing style, Bitcoin is one of the segments within a larger diversified portfolio, and so we branch out into multiple different asset classes, especially equities.
Also, only a tiny percentage of my viewers are actually subscribed. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video.
So who's buying the dip? Well, MicroStrategy, of course. CEO Michael Saylor tweeting the business intelligence firm purchased $10 million worth of Bitcoins, bringing their total stash to about $4 billion total. But not all investors are alike. Others pulled some $50 million from crypto funds last week, the first net redemptions of the year, as Bitcoin's price tumbled. But a new CoinShares report shows the outflows are a small fraction of the $5.6 billion put into investable crypto products this year. And joining us now to discuss Bitcoin and more is Lyn Alden Schwartzer, founder of Lyn Alden Investment Strategy. Welcome, Lyn.
Hey, thanks for having me.
Good to have you. So, Lyn, Bitcoin is shedding gains made earlier today. We are witnessing $42,000 support. Is this the end of the correction, or is there still room to fall in your view?
Well, so overall, it's pretty weak price action obviously at the current time. And so there's, the kind of the two main camps. One is that, it looks a lot like the 2017 bull run we pointed out when we got down to levels like this. That was usually more of a bottom. The deeper risk is that it's more like the 2013 bull run, where you had a much deeper and longer correction during that year. And so, from my standpoint, looking at various indicators, there's not very clear direction on price action over the next 3 months. But there are some clear causes for how we got here. And so, for example, if you look at this 3-month consolidation that Bitcoin was in, a lot of that really started to occur back when Grayscale's premium disappeared, which resulted in that very large investment vehicle no longer being one of the big marginal buyers for the asset. And so if you look back, for example, over the 4 months of the fourth quarter of 2020 and then the first month of this year, Grayscale accumulated something like 200,000 coins. And so that was a huge kind of marginal buyer during that bull run. But after their premium dried up, that arbitrage where, people would buy into that fund and kind of, get that premium difference on a risk-free trade dried up. And so that basically was a big collection from liquid Bitcoins and converting them to illiquid Bitcoins. And that trade is now done. And so now we have to watch out for other sources of demand, whether it's large pools of capital going through places like NYDIG, or just watching some of the on-chain indicators to see if retail hodlers kind of step it up.
So do you think that institutions will start jumping on board? And right now we're seeing mainly retail, or we have seen retail mainly prop up the market in the last couple of months. Some suggest that with ETFs about to be approved or potentially being approved this year in the United States, we could see various institutions having to buy Bitcoin. Would you agree?
I think ETFs would be a positive catalyst. Before it would have potentially been a negative catalyst because it could have taken away this GBTC premium trade. But now that that's already over, a Bitcoin, ETF coming about would open up newer sources of demand. So a lot of money managers and stuff would feel more comfortable and basically able to access that market more easily for their clients if there's an ETF. In the United States. And so I think that's one of the catalysts that can help out. We're also, we can pay attention to see what NYDIG reports about their client demand. Overall, they, from their public reports, they've been rather consistent about, the institutional demand for their products. And so it's going to come down to what a couple of different large pools of capital are doing in addition to the smaller pools of capital.
Lyn, you have a newsletter out that goes into depth on fiscal-driven inflation. What are some of your key findings in the context of what it means for Bitcoin?
So a lot of people are comparing this environment to some of the risks that we saw in the 1970s inflation. But my research have shown that in a lot of ways, this is much more similar to the 1940s inflation in the sense that it's very driven by fiscal spending rather than bank lending. And so the money supply is going up a lot, not because banks are lending, but because governments, especially in the United States, are running very large fiscal deficits and having that monetized by the central bank. And because federal debts are so high, and because we've been in this, kind of long period of disinflation, at least in some categories, they're very kind of adamant about holding rates pretty low, even as inflation has these kind of transient upward moves. And so generally, when you have that environment of negative real yields, for example, historically, that's a very good environment for gold. And so that, lately we've been seeing a little bit of rotation from Bitcoin back into gold after we've had kind of that other rotation. But in the long run, that kind of environment should be good for most real assets or most, scarce assets of some sort. Because when your cash holdings are failing to keep up with inflation, there's a strong incentive to go out and buy things like commodities or gold, or, we'll see how Bitcoin responds here. But overall, a scarce asset like Bitcoin should do pretty well in that environment once it gets through any sort of transient pressures that it's going through at the moment.
Right, I see that you are into value stocks at this time and selective about growth stocks. Are you still allocating or have any allocations to Bitcoin?
Yes, I remain long Bitcoin. And so, for my type of investing style, Bitcoin is one of the segments within a larger diversified portfolio. And so, we branch out into multiple different asset classes, especially equities, and Bitcoin represents kind of a big kicker there. To benefit from this, longer term secular adoption of digital assets.
And so would you say that this is a good time to buy? It's a frequent question we get.
I think it's a good opportunity if someone, for example, doesn't have a position and they're always, worrying that Bitcoin is too expensive for them. But I think it's important for people to clarify their timeline. And so if someone's going to buy now, but then if it goes lower, they're going to sell in 3 months, then it's probably not, the best asset for them. However, if they look at all the research, they're confident about Bitcoin's network effect, and they're interested in owning that protocol for the long run, these sort of corrections and consolidations are good times to kind of start a position. And then they can, choose based on their conviction level, based on, whatever goals they have, for their portfolio, how much they want to dial that up as part of the portfolio. But my base case for a while now, ever since early last year, is that it's good to have a non-zero Bitcoin position.
Right. And, reflecting on the Elon effect, how Bitcoin rallied when he announced Tesla bought $1.5 billion worth of Bitcoin and would accept BTC for payments. And then we saw the price crash yesterday when he said Tesla would not accept Bitcoin payments because it's hazardous to the environment. Is that troubling to you that one person can have such impact on the markets?
I think it's not healthy, but that was a very short-term issue, and so we've already retraced a lot of the price gains since the the announcement of Tesla's purchase of Bitcoin, and so I think that the community overall sometimes goes through periods where they're overly reliant on one source. So, for example, I mentioned how big of a force that Grayscale was for a while, and then we kind of transitioned to the Elon source, but for Bitcoin's health overall, it can't really be tied to the decision of one person or one group of people. And it's really about, the network's going to succeed or not succeed based on its inherent, technical nature and based on its network effect. And so, I think it's unfortunate that this Elon, kind of reversal came out because it actually overshadowed some more promising news around, some of the partnerships that, for example, NYDIG is doing with banks and with, kind of progress in Taproot and things like that. So while kind of the price action is attracting a lot of the headlines, under the surface, the fundamentals and the network effects still look robust.
Lyn, great analysis as always. Thank you for joining us this afternoon.